no idea for the traders where's the direction and what should you do in the market. We have a special guest for the same to discuss what should be the direction in the long term and how one should manage the portfolio. Jyoti Vardhan Jayapuria, founder and MD, Ventures Advisors. Mr. Jayapuria, good afternoon. Today's market is quite lackluster, and so has been the case if you talk about this calendar year per se. What should one keep in mind while investing in the market currently? We are at a time when the rate scenario is favorable, the macroeconomic conditions are favorable, but yes, geopolitical tensions still remain.
Yeah, so like what today is a symptom of what's been happening for the last 1 year. It is what I call the classic time correction. We had like a sharp rally in the market post-COVID, and after that, you always need a breather. Like if you run a marathon also, you can't keep running. At some point, you take a breather and then get ready for the next leg of the run. And so that's what we are seeing in the markets for the last 1 year. Valuations were expensive, and so, it's time correcting rather than price correcting, which is always good. Like you said, the macros are very good. So, for last 20, 25 years, I always used to say India is a country with, great micros, but not so good macros. Now we have the reverse situation. The macros are looking very good. We have great macros today, but the micros are not looking good. Earnings growth is what is stalling. And given that valuations are not cheap, you need earnings growth to come before you get a leg up in the market now, because otherwise at this valuation, you'll probably see more time correction coming.
Agreed, Mr. Jayapuria. Good afternoon, Mansi, this side. And you're right, a lot of direction less as we see sentiments developing in the market, and the macros are looking quite visible at present. And I completely second the thought when you say that. The question is how to filter noise and build long-term wealth in this scenario. What should be the sectors, the themes from here for at least a year and a half or more, so that one can create a good portfolio?
Yeah, Mansi. So, like ultimately, it's very simple, right? Two things drive market, the valuations and the earnings. So from where we are today, there's no great mispricing of stocks. So, what you have to count on a lot is over the next 2 years, you'll probably see a lot of returns in the market coming from earnings growth rather than from any valuation re-rating. And that's why you have to keep picking sectors where you think that the earnings growth will be more visible. There's of course, so some things which we are looking at is, for example, cement. It's a sector which for the last 18 months has been like earnings have not really grown over there. What we've seen is a consolidation of the sector. So, now that a lot of consolidation has taken place, we think that, pricing power will return to the cement sector. Volume growth will be fairly decent. And because of that, as utilization picks up in the segment in a more consolidated environment, the pricing power will help drive earnings growth. So, it's like you keep looking, and this is just an example, I guess, so keep looking at stuff where earnings growth will come, and that is what, probably will stand out.
Right. Mr. Jayapuria, one more important event coming up next week is, of course, the Fed meet, and the expectation is that there is going to be a rate cut up to 50 basis point. I want to understand from India's point of view, how should we look the geopolitical scenario? When we spoke last, of course, the tariff threat was much more than what it is now. There is no change as of now, but still, if you see the messages which are there on social media, at least the tone has changed.
Yeah, you're right. So, in last 2 days, the tone has changed, and I think our team is going there to the US to have further negotiations. But it's something which, in the air, like, some time back before these extra tariffs were imposed on us, we thought India is very close to a deal. In fact, most people in India believe that. So I think till a deal is signed, a deal is never signed. And, till then we may have to bear this, extra tariff which is there. Now, the good thing is, the market has reconciled to these tariffs and, not been like a major dramatic down. So if anything, if a deal is signed, or let's say the extra 25% is removed from us, and then, it will be a positive. But of course, they are mixed bags. So if you think, there was a Trump tweet which said that we will get, India talking, and so we'll sign a deal. But 1 hour later, he also tweeted asking the European countries that, you should impose tariffs on India and China for importing oil from Russia. So we don't know which way this really goes. But to me, the Fed is probably going to be a more important thing than, this the way it plays out on the global markets. So if we go back into history, there have been like 7 rate cuts by the Fed or 7 rate cut cycles by the Fed in the last 35 years. The market's been up a year later in 5 of those 7 events. So there are 2 times where the market did not do well. As we go into this Fed cut, the one negative is that they are cutting more because the growth is slowing down. And there is worry that inflation will come up because of these tariffs. So I think, the key worry for everybody will there be stagflation? But generally, I would think a Fed cut would probably help emerging markets in general. And, if we get better flows in emerging market, India probably would be a gainer out of that also.
I agree to that. An economic indicative action is something which is quite crucial and one should watch out as well. But then talking more on sectors, and these days we talk all about the consumption theme after the GST rate rationalization. Agreed that that's going to be the theme for next 6 months, but can't negate the fact that the IT sector has also started doing the positive rounds after a span of, let's say, sideways momentum. Now, the US corporate results have been one of the strongest in recent years, but Jyoti Vardhan, Indian IT growth has seen a tank down approach, or rather muted approach. What's your take on the IT sector? Of course, tariffs do remain a central theme in corporate discussions, but then connecting sector, the global connect has an eventual impact on the Indian IT basket as well.
Yeah, so Mansi, IT is one sector where we have been underweight for like quite a long time. And there were 2 things we'll go with. So one was our view that the US environment may not be great in terms of the macro situation. So which, at some point will start impacting, the IT things. And it's not just, what the corporates are doing, but also the whole theme that, we don't want our jobs to get outsourced outside of the US. We want jobs to come back in the US. The other very critical thing we defined us was that, there's probably a lot of structural change happening with AI, and which, will not be positive for probably the Indian IT companies over the long term. It will mean that the number of jobs required or number of people required to do the same job will come down. Of course, I think the IT companies will get jobs in AI related space also, which will be higher margins, but probably need lower number of people. So in terms of, pure growth environment, it's like tough to think that over the next 3 years, the Indian IT companies may not show a very strong growth. And so, that has been what has been driving like an underweight stance on IT. Having said that, now we don't know about these tariffs, and there's a lot of noise which comes that, there'll be tariffs put on the Indian IT space, which probably clouds that space. The sector, like you said, has underperformed quite a bit. These are still very cash-rich companies. So, there's probably a shorter-term play over here, especially the environment remains uncertain. But in general, for us on a 3-year basis, IT is still not the space we are really looking to go overweight on.
All right, Mr. Jayapuria, thank you so much for joining at this hour with your views. With this, it's time to take a very quick break. Nifty is still hovering around 25,000 mark, and we'll discuss about more about how markets will behave further.